Hello and welcome, everybody. I am your host, Eric Lyons, and I am here to welcome you back to another exciting episode of Metallicus Live, where we talk to exciting guests about the future of cryptocurrency, blockchain, and how Metallicus plays a key role in that future. Now, it's a new year, so that means new guests. And without further ado, I have the absolute pleasure and privilege to introduce you all to the former leader of the Federal Reserve of New York and current Metallicus Advisory Board member, Lauren Hargraves. Lauren, how are you doing today? Thank you so much for hopping on.
Hey, Eric. Hey, everybody. Thanks for having me. I think this should be fun.
I'm looking forward to it. I think it's going to be so much fun too. So, we talked a little bit beforehand leading up to this call. But for those that are listening into this Twitter Spaces right now, or that are going to be listening to our podcast, can you please tell the viewers a little bit about your background, please?
Sure, I'd be happy to. I spent virtually all of my career at the Federal Reserve Bank of New York, more than 35 years there. So that's the headline. But I think it's a little bit more complicated because I moved around a lot at the Fed. And if I have to explain it in a simple way, I'd say I'd have had three careers in one at the Fed. So I spent 13 years in the Fed's market area doing things like monetary policy implementation, foreign reserves management, the discount window, and a bunch of other things. And then I changed direction completely and I went on to manage something called the Wholesale Product Office. And that's where Fedwire Funds, Fedwire Securities, and a lesser known service called National Settlement Services. This is where the Fed has all its high value payments and security settlement services. And then my last 10 years at the Fed, I was in supervision and regulation, where I supervised some of the largest banks in the US. So that's like a pretty short synopsis of my career at the Fed.
I love it. I love it. If you don't mind me asking, what made you transition between, like for a better word, would you consider it departments or how
Yeah,
was it?
they're departments. I mean, each one was a little bit different. Like in markets, I was I just had conversations with folks, and an opportunity came available. I was able to move to Fedwire. Similarly, I had been in markets group I had been in Fedwire for a while, and it's kind of like post financial crisis, and a lot of stuff was actually happening in supervision and regulation. They had passed Dodd-Frank. We had new powers, and so I just, it was a way of keeping it fresh. I'm pretty intellectually curious, and so I like to go deep on things, but I also, after 10 years or so, it's nice to make a little bit of a change.
Absolutely. I hear you on that. Got to get some new scenery happening. So, out of like, would you say those are the three significant areas of the Federal Reserve?
Yeah. So when I first joined the Fed in New York, the president of the New York Fed was a guy named Jerry Corrigan, who then went on to work at Goldman for many years. And he used to say that there were three legs of the stool of the Fed, right? There's monetary policy, there's supervision and regulation, and I'd combine that also with financial stability, and then the third leg of the stool is financial services. So I kind of felt like I was able to get, like the full Fed experience. And I didn't work in every department in the Fed, but I did work in what I consider the three main business areas. And it was really a terrific career. Really smart people who work there, people who care a lot about doing the right thing. So,
That's awesome. That's awesome. So, what would you say is the most challenging out of the three for you, and why?
okay. So that's a tough question, because each one is, they're challenging for different reasons. But I'm going to go with Fedwire as the most challenging because, like at that time, we had decided to get off the mainframe. So we're talking like 2005 to 2012. So we were getting off the mainframe. I know you guys are all laughing because we're getting off the mainframe in 2005. We were trying to adopt ISO 20022, which is a new, better messaging standard. And we had a lot of ideas about making Fedwire better and so forth. But kind of like the private sector, it's the one area of the Fed where you have to meet. I'm going to use the term profit and loss. It's like a P&L. It's this. There's a law out there called the Monetary Control Act of 1980. It requires like that the Fed Financial Services, so Fedwire, Fed ACH, all those kind of things, that they have to recover their costs. So it's sort of like a P&L, but it does add this extra dimension to running a business. So so at the Fed you usually have to meet a budget, but it's way more complicated than meeting a budget. So I had to manage the day-to-day running of the business. We had that technology upgrade. We were trying to change the product a bit, and we had to meet the P&L. And that's also when the great financial crisis happened, and so P&L was harder to project. But I like challenges. I like multitasking, and I really enjoyed my time there. And it was kind of a unique experience because, when you're on that side of the house, when you're working for the federal government, you don't often get that kind of experience. But for me, I thought it was really unique and more challenging than just running a regular business.
I hear you. I hear you. Especially since you were definitely in the middle of the financial crisis and that 2012 time. That's when subjectively the country was starting to like trying to pivot itself out in a way. Um, by chance, was there other challenges that the Federal Reserve faced, either within that time or before, or even after that time frame?
Yeah, so I was at the Fed 35 years. There were a lot of what I would call financial stress or crises. For as I look back on it, there were two times that were probably the most stressful. Um, One was 9/11. And for those of you who aren't familiar with Lower Manhattan, the Fed sits about, I don't know, two avenue blocks um, east of the World Trade Center. So when 9/11 happened, we had a bird's eye view. We of course, had to relocate. So did a lot of the banks that were located downtown. So that was a stress that was more of an operational stress, a test of our ability to go to backup sites, to find everybody. I was in the markets group at the time, so we had the open market desk. We had to find the broker dealers. Some of the brokers were actually in the like Cantor Fitzgerald was in the World Trade Center, so it was just a stressful time, and it took a while. I mean, I'm going to say it took us about 3 months to even really sort of begin to have normal operations. The great financial crisis was like 2008 on was like completely different, right? That was for the first time. I think it really felt like a systemic risk of a different size, if you will. It was impacting so many of the banks, right? So first you heard rumors of like a bank here, a bank there, and then you realize like so many banks are in trouble. What are we going to do? And it was, there were, it, it was we just had to pull together and try and contain it as best we could. Um, Obviously, it lasted a lot longer than 9/11, and people really didn't have time to to take a break. I mean, even more so than just working hard. Talking round the clock, round weekends. People literally relocated. If you lived in the suburbs, people were getting apartments in the city just to be able to do it. I don't have any Monday morning quarterback advice for my former employer, but I do know some of the things we did, like lending to banks and creating uh, lending facilities that benefited other types of financial services firms. It created a lot of heat for the Fed. And so, you asked about challenges. I think that's a different challenge in and of itself. I think we've been, or the Fed has had to kind of grapple with that ever since the great financial crisis. So those are two of the biggest challenges while I was there.
Thank you for that. Wow. It seemed like it kind of just transitioned from the first event all the way up into the financial crisis without really even just kind of stopping. So for I would imagine for some people, it was just years and years of just all hands on deck in a kind of a way. Would you say that, or would you say otherwise?
I mean, it wasn't like that same level of stress, but you had weird things in between, right? Like I think Lower Manhattan, we had a blackout one day. I'm so you have these little sort of like I would say mini fire drill kind of things. Um, but I think 9/11, I think the biggest thing was that, Washington came and said we had to, yeah, sure you did fine, but here's you did fine because like the situation was what it was, but here are all the ways that if it had come down a different way, you wouldn't have been fine. And so we had to create much bigger out of region backup. We had a we had a backup in New Jersey, right? Then we started using other reserve banks as our backup, so like way out of region. So it wasn't a crisis, but it was like a major change effort. And yeah, that pretty much finished up, and maybe had a little breather, and then the great financial crisis came. So it was a busy time, but busy is good, right? So
I was saying I strongly agree, but I think my mic muted, so apologies on that. So, actually, I'm curious. You were talking about especially during these events, working with a lot of these banks. Can you, if you can estimate, how many banks have you worked with over your tenure?
all right, so 35-year career. It's going to be a hard number to estimate. I'm going to say that I've worked with hundreds of banks because I worked at the Fed that long, and I would say the vast majority of my career was external facing, meaning that I was in businesses where we were interacting with banks, right? Um, but some of that work really involved working with these like behemoth institutions in different areas, like working with a large bank, pledging discount window collateral, or dealing with their broker dealer subsidiary on the open market desk. And then later, dealing with their payments group. And then, at the end, I ended up being the supervisor of these big banks. So I may be overcounting how many I dealt with. Um, yeah, kind of interesting. Um, and I don't know, maybe you want a little bit about like thoughts on the banks and how they are different or similar, right? So I'd say that basically all the banks I dealt with, it's pretty clear that banks are out there. Their main or one of the main things they have to focus on is making money, and so that means they're both thinking about how to increase revenues and on cost containment. And so like I see that across all like big banks, little banks, foreign banks, that's similar. And whenever I didn't understand where a bank was coming from, I would step back and try and think about how they have to navigate their investor expectations and how that shapes their views on whatever issue we were discussing. So that's probably true for any private firm. Um, but I will say, like the banks themselves, the whatever the hundreds of banks that I dealt with, they were different. Like they had different personalities, if you will, different cultures. Um, some are real big risk takers. Some are like super organized. They're like the good student, right? And they try and manage the Fed. And it kind of feels like they have some CRM type software because they seem to keep track of conversations you've had. And I'll meet with one banker who will recount a conversation that he or she wasn't at, right? But they know what I've said to somebody else in their organization. And then the other interesting thing about dealing with all those banks was really seeing how they changed, especially not recently, but back a while back. There was a lot, especially in the large bank space. There was a lot of M&A. So like J.P. Morgan and Chase had completely different cultures. pre-merger. I mean, J.P. Morgan was so kind of staid, and it blended with Chase. Chase wasn't really a cowboy so much, but it did have a different. Had a different culture. And another interesting one was the merger of Deutsche Bank and Bankers Trust, where I think the old Deutsche Bank was pretty, what's the word I'm looking for? It's pretty staid, or I had a pretty, buttoned up corporate culture, and Bankers Trust tended to be the cowboys back then. So watching those cultures meld over the years was kind of interesting. So anyway, those are some thoughts about the banks that I've dealt with.
Awesome, awesome. Now, I want to discuss your some of your committee work, specifically with the at the bank for international settlements. Can you share some of the projects that you've taken on?
Sure, I'd be happy to. For a Metallicus audience, I'm going to say, let me focus on the work that I did related to cross-border collateral.
Yes,
Um,
please.
okay, so this dates back to like the early 2000s. Sorry, guys, it's a little bit of a history trip. Um, and back then, the Fed was accepting foreign denominated collateral for emergency lending, like the discount window, and for collateralizing intraday loans on payment systems like Fedwire. So you may or may not be familiar that when you send payments over the Fed, you can overdraw your account during the day. But generally, we're looking for collateral. And so it was a bit controversial back then because that the Fed was taking this foreign denominated collateral, because some central banks felt like we were taking collateral from their markets, and they didn't have big government bond markets, and therefore there wasn't collateral available for their banks to do transactions. I don't actually think this was true. I think it was a fear that it would happen when there's stress, right? So when you have sort of issues like that, you usually try and resolve them, through the BIS. And we were working with this committee, a payments committee at the BIS, and we basically worked across with the other central banks to develop some principles. I'm going to say it took years and years, but we did get the principles done. I'm going to say mid 2000s, ahead of the great financial crisis, and so in theory that should have helped, because it really allows collateral to flow more freely without frictions across borders. Um, but I think for this audience, like, what does this example say? The thing I learned, and I think is relevant, because I think people here probably wonder, like, how's policy going to develop in the blockchain DeFi space, right? Policy making takes time. There are a lot of people at the table. There are a lot of different views that need to be taken into account, and sometimes you end up agreeing to, like, things that are maybe a little bit less than what you've hoped for, in order to get agreement on anything and to make sure you move the ball forward a little bit. So if you ever see, or if you're ever, like, kind of confused by what you see in policy, and you think that just doesn't make a lot of sense to me, it may be the result of a don't let the perfect be the enemy of the good type negotiation. So I hope that example helps.
I think it does. Out of curiosity, why do you think the Fed and banks are slower to adopt some of these newer policies or having these dialogues?
Yeah, so I think there's probably a bunch of reasons for the slowness. I think probably the first one was, you know, I think the first thing was of course Bitcoin, and I think people thought, at least, you're talking about the Fed, right? The Fed, look at your dollars. What did they say? They say Federal Reserve Bank, right? The Federal Reserve. So I think when you think of it like a currency, I think people just thought, like, this is going to go away, right? Like, I think there was, like, just too much of a leap for people in kind of tradfi to understand what this was about. But obviously, there's been staying power, and there's been a lot of things happening. But when it comes down to it, I think that there's, uh, that there's I guess there's some fear and probably a little bit of um, misunderstanding about what DeFi and blockchain are. So I think that's, that can be part of it. On the banking side, right? Well, right, U.S. has a bunch of different regulators, and rather than having gaps, I think there's probably more overlaps. So you have the banking regulators, and at least when it comes to these kind of issues, they've been trying to work together and publish joint things. It's also, there's stuff happening at the BIS as well. And again, trying to be joint, but they're mostly focused on banks. Remember that they're, the powers granted by Congress to those regulators are really about entities regulating the banks. Then you have the SEC, the CFTC. You have some, consumer focused. You have OFAC and FinCEN. So they're all focused on different things, and I think it can get a little bit confusing. So let me give an example, right, that I think has caused some confusion. So you had the BIS, so the Bank for International Settlements came out, and it published some high level things that made it clear that banks would have to hold a lot of capital if they held cryptocurrency on balance sheet. But the banks looked at that and said, oh, but it looks like, we couldn't probably, do custody activity. So a lot of the custody at banks started moving in that direction. But then last year, the SEC came out, and with the Staff Accounting Bulletin 121, and that bulletin said that the custody of public key crypto assets really should be on balance sheet. So that kind of like threw um, water on the flames of the aspirations of those custody banks. I'm not going to say I don't. I think at some point this will all clear up, but 2022 didn't help. There was just the kind of things that went on in the blockchain space really are the kind of things that regulators don't like to see. And it doesn't really, what happened didn't really have to do with the fact that it was blockchain, and a lot of it was in centralized finance, and a lot of it had to do really with financial engineering, using a lot of leverage, right? It's like traditional things that you see, things that you see in TradFi going on in crypto, and probably were able to go on because there weren't really any regulations. But so I think, at least on the banking side, you see the regulators and the supervisors probably being pretty cautious, because to them they look over and they think it looks a little bit like the Wild West. So I think it's going to take um, you know firms in the blockchain space who really just have kind of normal aspirations as a business, right, to be able to work with the regulators and help bring them along and try to understand, try to separate the wheat from the chaff. What is what are their real concerns about what's going on in the DeFi blockchain space, and what are things that are really can be put to bed with just a little education or more transparency. In fact, that's one of the things I like about Metallicus, right? Like, you have Marshall out there saying things like, proof of reserves, proof of liabilities, trying to be as transparent as possible. I think it's just going to take a little bit more of that and a little bit less of, Three Arrows Capital or FTX and Alameda. But unfortunately, being a good corporate citizen, it doesn't usually get a lot of headline news, and so that's a little bit of a challenge. But I do think it will take some time. I think as you know you see a number of not just blockchain, but a lot of the fintechs really moving into the banking space as well. And I think those conversations, as reputable firms do that and demonstrate that it can be done, I think that will help a bit. But it is basically on the banking side, the regulators have said, come to us on a case by case basis, which I know has to be frustrating to this community.
That it is. That it is. So, do you, by chance, do you keep in contact with some of your old colleagues? If so, have you ever asked them how they look into crypto, like themselves? Like, how do they feel about it? What are their thoughts behind it?
So I'm prohibited from talking policy with them for like a couple more months. I talked to them about it back when I was there. That's sort of how why I was interested in joining the advisory board with Metallicus. So at the Fed, they tend to give you like other jobs. So what I called it my side hustle. My side hustle was a small group of people that looked at kind of knew the way the banking system was, things that were happening that were new, changing, things that were misunderstood. And so there are a bunch of people who did some analysis on crypto. I'm going to say most of them were guys and they were really into crypto and they were sort of helpful to me to understand it. And I co-managed this with another colleague. And so he and I both went out and bought really small amounts of crypto, and we started blogging about it because we thought part of it was education. And what's kind of interesting, I think, for all of you to hear is that the views inside the Fed are very different. When we started blogging about it, I have to say that we had to blog about a lot of things. That had to be the one that we got the most response on. I would say there are a lot of people at the Fed who were either really active in crypto or who were, I'd say they were crypto curious and they were really interested to see, what happened, because my colleague and I were kind of trying to see, we kind of went out and bought, I'm not going to say which ones we bought, but not, it wasn't the big names. We weren't like going head to head with Bitcoin and Ethereum. We wanted to, try some newer things. And so the idea was we were going to show who made more money. But at a certain point, they asked some of the people who work for us to work on policy related to digital assets, and they asked us to divest. So we never got to finish. Well, I say we didn't get to finish. My colleague says we finished because he was ahead of me when we had to divest. But it was fun while it lasted. So I would say there are some people. There's a small community who I think is pretty knowledgeable within the Fed. They're generally not working on policy though because they don't want to divest their assets. So that is a little bit of a conundrum.
Got it. Got it. That makes a lot of sense. And so by way of that, you said that you were looking into, I don't want, not necessarily altcoins, but everything outside of the Bitcoin Ethereum realm. That's what you said. Um, about how many different places and avenues have you stopped at before coming across Metallicus?
Yeah, so that was really for work, and so Metallicus I came across kind of like a very different roundabout way. Um, I came across Metallicus. I had kind of decided, like, I had been at the Fed a really long time, and I wanted to go, and I was kind of struggling. Do I want to go on to full-time work or not? And so I ended up hiring a career coach, if you will. And I had figured out that, I wanted to do something probably not full time, and that what really interested me were things in the fintech space, because, I it felt to me like the world is changing, right? Like the world of finance is going to be very different 15 years from now, and I wanted to sort of find a way to get a seat at the table, and so I ended up networking with a bunch of people. Like every week I would just make sure to reach out to different people who had left the Fed or people that I had worked with, cold called people. At any rate, one of my former bosses had spoken to Metallicus, and I think she had been interested in it, but she is working full time, and her employer wouldn't let her sit on an advisory board. So I had a nice conversation with Lee, but he was at the time looking for somebody like right away, and I was still like 6 months out from leaving. So we said our goodbyes, and I didn't think anything of it. But then Lee reached out again in 2022, just as I was retiring. And the timing was right. The rest is history. And, it's been really fun to be involved with Metallicus.
That's awesome. That's awesome. We're so excited to have you here with us as well, first and foremost. And shouts out to Lee, of course, doing amazing work on with our team and our company. Um, so, out of curiosity, what do you expect to happen in Bacon this year? You talked a little bit earlier about education being a focal point, but do you think that's going to happen this year, or do you think something different altogether is going to come about this year?
So just banking generally, you mean?
Banking generally, yes.
Yeah, yeah, that's a pretty broad question. I think it really depends on the economy. So, we've got inflation, rising interest rates, right? Those kind of go hand in hand. You have the after effects of the pandemic, the ongoing war in Ukraine. Who knows what's going to happen with, China's changing policies on COVID, right? Are those going to be big enough to have an impact? So usually when interest rates are going up, the stock answer is, oh, that's good for banks. And I don't know that it's true normally, but some of these other things may offset it, right? So um, if the economy is slowing down, you know, you may see that banks have to increase their loan loss reserves. That's going to impact their profitability. And so they're going to try and think about ways to maintain their profitability in the face of those risks. Um, you know, we saw layoffs with tech firms last year. This week, we already saw Goldman Sachs announcing layoffs. So I think it's going to be a challenging year. But linking back to your prior question, like sort of about like banking and DeFi, we may see we may see. I don't know that we'll see. Will banks dabble in DeFi this year? I mean, some may, um, but I think that when uncertainty is high, it's unusual to see banks making those kind of big investments. I could see them maybe adopting some kinds of fintech, especially if it can help reduce costs quickly, or if it can bring on a lot of new customers. But it's really it's a really tough call this year. It's really unlike anything we've faced before. It's not, there's recession risk, but the if we fall into recession, it's a very different path than we faced before. So Eric, maybe you can interview me next year and you can point out all my bad projections.
Metallicus, you heard this first. Please put it on the calendar. We're going to be back this time this year, this time next year. That's awesome. So we talked. We brought this up a little bit earlier during the chat, but I would love to just ask again. What can Metallica do to help, if at all possible?
Yeah, so I think the kind of things that Metallicus has already started to do, right? Like by doing by being transparent, by by having dialogue and education. That's helpful. I think if and when. So I listened to the last one of these, and where Marshall and Arena were talking, and they talked about the future, and hopefully at some point getting that fourth leg of the stool. So when they if Metallicus, if and when Metallicus gets a bank, right? I think that's when the dialogue can really get a little bit deeper and help clear up some of the misconceptions. So, I think there's that. The other thing that like my personal view, when I look in this space, right, in DeFi, there's so many there's so many different chains, there's so many different coins, like there's even just like traversing across that can be hard, like, and to really understand, not all coins are created equal, and you really have to read the white papers behind them to really understand them. At some point I do think um, there may be like I think I'm seeing a little of this. I saw something on LinkedIn, right, like that developing standards in the crypto space, not so that everything is homogenous, but at least that there's kind of working together so you can sort of understand, more easily the difference between the different types of coins, chains, projects. If standards start to develop, I think it would be perfect to have Metallicus have a seat at the table. But I think that from what I can tell, those seem to be at a pretty early stage.
Even the blockchain industry as a whole still very early on. Still much to be done, but progress is happening every day. It seems. Sometimes we go backwards, but then we go forwards afterwards. Being optimistic, but out of curiosity, before we wrap up, Lauren, do you have any final thoughts for us that you would like to share?
No, I'm just really encouraged by all the people that showed up today. So that's really, thank you for coming to listen. I think Metallicus has a lot of promise, and they've got a nice vision forward. And I really think it's good. It's great that that you're out here, trying to communicate with the community and make it transparent about what you're doing. So kudos, happy to and really happy to be a part of this, however small I'm playing. But anyway, thanks for having me on today. It's really fun.
I'm not so sure it's a small part. I think you're playing a big role here, and I don't want to speak for everybody else here, but I'm truly grateful for having you here to talk because it's been awesome just getting to know you, a little bit about your background, and just learning about your expertise and what you looking forward to see in the future. But thank you so much, Lauren. This is all the time we have today. I want to give another big thank you to you, Lauren Hargraves, for your time here at Metallicus Live. And yeah, let's just see where this year brings us, not only for our industry, but for banking and then beyond as such. I want to thank everybody else who hopped on our Twitter spaces. If you haven't already, Metallicus Live is available on all podcasting platforms such as Spotify, Apple, iHeartRadio, Amazon, etc., etc., etc. And for those of you who are going to be listening in on our podcast, feel free to give our Twitter a follow at We Are Metallicus. And that's what we are. We are Metallicus. This has been Lauren Hargraves. My name is Eric Lyons, and I will see you all later.
Thanks, Eric. Thanks, everybody. Take care. Have a good weekend.
Thank you. You too.